What is going on YouTube, guys? After nailing that big drop in Bitcoin, we are going to dive deeper into the crypto space because crypto's finally back alive. So we're going to go over some altcoins. We're going to talk about the crypto news and of course cover the indices because we have trades that set up and we're going to get into that TA as well. But guys, real quick, I wanted to show you our Discord. A lot of you keep asking like, what is the membership if they join? You can join straight through YouTube. That's the join button underneath this video, but we're doing a special sale. It is 50% off from here to the end of the year. It's like a 6-week sale. We very rarely ever do sales, but with crypto on the move, nailing these trades, I want you guys to come and check out our Discord. I just want to show you this right at the front of the video. This is from knowing that drop was going to happen, guys. Never seen this much money from trades before. Thanks, market makers. You look at these percentages, obviously, this is going to vary individual trader to trader, but we have trade signals, we have education, frequently asked questions, and of course, community chat, TA on all the different marketplaces. Guys, we have, let me see the current count. We have 12,745 members. We started this room in June of 2021. This is probably the fastest growing channel and Discord in this space, and we're growing through the bear market. So if you guys want to come give us a try, it is 50% off for your first month. So come check it out. That link is in the video description. You have to use the link to get the discount. Can't do that type of stuff through the YouTube integration. So use that link, follow the steps. You need to download Discord, verify your Discord account by opening the email Discord sends you, and then join, and you are good to go, guys. And I hope to see you in the room. Let's go ahead and jump into the TA. Guys, as always, this video is brought to you by our two sponsors, BITGET. I'm an OG on BITGET. I think it is now the third largest exchange since these exchanges are falling like flies. Check out BITGET if you want to trade with us and support this room, and SimpleFX for all the indices and for, of course, individual stocks, Forex, and commodities, guys. Fantastic liquid exchange. Those links are in the video description as well as the tutorial for SimpleFX. So let's jump into Bitcoin. All right, guys, so we talked about Dante's descent last video, so I don't want to spend a lot of time on it. Again, 24 hours after this pattern was supposed to activate, it activated. We got our drop, made new lows in Bitcoin. The purpose of this is to see if Bitcoin's going to continue to make new lows. Now, let me tell you, I think Bitcoin is now disconnected. Everybody's been wanting Bitcoin to disconnect from the Nasdaq, disconnect from tech. It's disconnected, but not necessarily in a good way, guys. FTX today is filing for bankruptcy. They were talking to other hedge funds. They were trying to get a $9 billion bailout, for the liquidity crunch. The Bahamas regulators, because it's based in the Bahamas, they froze the accounts. They froze everything on FTX. They're filing for bankruptcy. So if you have coins there, guys, best of luck. I hope you do get them out. If you can withdraw, I highly suggest whenever a company's going bankrupt, look at Voyager, look at Celsius. These companies can lock your coins up. Highly suggest you get them off, protect your hard-earned funds, okay? Now, let's see if Bitcoin's going to go down more and what we expect to see here. Guys, a 10-year yield. So the 10-year dropped, obviously. We had that inflation number, the CPI, come in lower than I expected. Basing my expectations on the Cleveland Fed, I have no inside knowledge, obviously. The Cleveland Fed, 16 of 19 times, came in too low over the last 19 months for inflation expectations, and they had it at 8.1. I was expecting an 8 handle, as you guys know. Wall Street had it at 7.9, and it came in at 7.7. Now, overall, the elevated high inflation, that's still 7.7% increase in prices year over year. That is still massive inflation. We still have individual sectors of inflation that are still heating up. So the Fed, I expect, will still do at least 50 basis points come December, but that dropped the 10-year yield. Now, the funny thing about understanding TA and understanding media, when we were here at 3.8 on the 10-year over here in this range, October, late September, early October, the media was going nuts. Oh my God, we haven't been this high in almost a decade. right? And now that we drop from a multi-year high, I think like a 12, 14-year high, back down to like a 10-year high, this is perfect for stocks. This is going to be great for a rally for stocks. So again, it's all relative. It's all in the eye of the beholder, right? Because if this was bad for the stock market back in September, October, well, you're back in the exact same region again. So it's still bad, right? So we'll see what happens. Looking at the DXY had the largest drop in 7 years. Now the DXY, of course, could rebound back up. There's a couple ways to read this, guys. If the DXY does start pulling down more, if the 10-year yield does start pulling down more, the knee-jerk reaction is to say that's bullish for risk assets, which would include crypto and equities. Well, that also means the economy is slowing down. Q4 earnings are anticipated to be negative, okay? Negative. And they still haven't revised Q1 or Q2. The markets are going to pull down. What's going to end up happening over the course of the next 3 to 6 months, you will have lower stock prices, potentially a lower DXY, and lower bond yields. Again, recession coming, okay? So that's going to happen. But knee-jerk reaction, armchair analyst that you see on TV, this is bullish for stocks. And of course, stocks, which we will get to after crypto, had the strongest rally they've had since the pandemic crash. Let's jump to Bitcoin. That's the Dante's descent pattern. Now, a couple of you asked, and it was a good point to ask about, since this candle, the October 31st, November 6th candle, was supposed to be the bottoming candle, and that started happening 24 hours later, does that mean the next candle could be the wave up? That's the question, right? Because remember, this is a bottoming pattern, and then you're supposed to have a wave up. But you can notice that it's consistently lower high, lower high, lower high, right? No lower high was ever defeated on these swings. So if we look at this on the weekly chart, I went ahead and threw this as a line chart, and then you can see I used a Fibonacci fan, and I'm going off the bodies here, not the wicks, okay? But you can see, we set up that trade that I shared with you guys based off of hitting the Fibonacci fan, and of course we've had this massive 20+% drop now. When you look at this, guys, the 100% retracement after the 886 here, I mean, again, we've been over this in previous videos with Dow theory, with Fibonacci waves. This gets you down to that pandemic low, the 3,000 range. 3,956 was my Dow theory number, and that's the number that you will go to eventually. Does that mean it's going there now? Absolutely not. What I anticipate, and I could 100% be wrong, Bitcoin's coming to a bottom where it will then wave up. That bottom could be here where it's at now, 16.7. It could be further down at 14, 12, 10. I had that bottom based on Fibonacci waves. I had that bottom at 10.5 to 13.2. Again, depending whether or not you use wicks or bodies, 10.5 to 13.2 is where I'm looking for Bitcoin to bottom and then do this, okay? And again, based on Dante's descent, which these green boxes show the rise, okay? These two green boxes, this green box down here is the average of the two previous green boxes, and you would be looking at a 50% move from wherever Bitcoin bottoms. So for easy math, if Bitcoin bottoms at 10K, you'd be looking for a move back to 15K. Again, this is an average, okay? That's not based on anything else other than the fact of the two previous rises in this wave projection that Bitcoin's been descending in to a T within 24 hours on a weekly candle, to a T. So that's what we're looking for. So I think you can see Bitcoin come down to 10.5, 13.2. This is your false bottom. So if it comes down here, holds this area, next year, if we complete our 7-year market cycles, which we have been doing now since the 1973 crash, next year will be the bottom in the market, okay, for stocks and for crypto. And that will be the bottom. And so if this is the bottom here for your wave up, then you're going to have more volatility up and down, but eventually coming down to those pandemic lows, right? Before the $6 trillion was printed in 30 months, sending the markets roaring, including crypto. You have to understand that, guys. We've been over this many times, but the S&P, the broader stock market, averages about a 10% to 11% return a year since 2008 when they started the money printing and the 0% interest rates. That's since then. The historical average is 8%. In the last 2 years, the S&P, since the pandemic, went up 120%. Nasdaq did more than that, over 120%, I think 124. The Russell did more than that. They all 6x their normal 2-year returns, okay? They 6x them. And it's the same with Bitcoin. That's why this is a parabolic rise. That's why since last November, I've been warning you guys about the coming decline. M2 money supply is tightening up. This is where you get your velocity in these moves, in liquidity. And of course, going into a recession, we know the average drawdown on the S&P is 35%, and you're somewhere around, minus 20% right now, barely in a bear market on the S&P. Look for those losses to at least double. And if we are in a bubble, those losses are going to triple. Been over those targets before. Watch my market collapse video on YouTube. You can see those targets, okay? Let's go ahead and look at Bitcoin now on the daily time frame. Daily time frame. So if we look at this, guys, again, we did a wave projection here to get these targets. And let's look at a couple of things, important things here. Your 200, 233. That's going to be an excellent trade whenever we actually do impact them. We haven't impacted them, as you guys know, since 48, 266, which was months and months ago. So looking at this wave projection at the 618, 16,058, you got a little bit below it. You bounced up. The low in the market's 15,469. This is a BITGET chart. So that's your current low in the market. And of course, looking at the 1 fib, that's 10.4. The 886 is 12. The 764 is 13.89. So we have decent volume here, getting some average volume bars. Obviously had a big 2 sigma yellow bar here for the standard deviations of trend for the selling, okay? And this is where we got that trade from, guys. I told you guys about this the day before it happened on YouTube. I set up a trade at 21.2. It was at 21K when I gave it to you. We got this nice drop off of it. So looking at this, the price range, we can go ahead and grab this, get that current amount of 28% drop, guys. We still have guys in this trade. I'm still in this Bitcoin short, okay, because I anticipate further movement down. Now, we have traders in the room. We have members in the room that are really good in the small time frames looking for other entries. I'm looking for other entries to add to my short. But, this I do anticipate further decline. And like I said, I do think in some ways this is unhinged from the markets now because the markets obviously just had a massive 2.5-year pump, okay? Strongest pump in 2.5 years since the pandemic, and Bitcoin fell. All this, CZ tweeted out from Binance that this is going to have a cascading effect, that we haven't seen any of the damage yet. JP Morgan saying the same things. A lot of these hedge funds and, analysts are coming out saying this is really going to hurt crypto. So look for more decline. We're going to be on this channel and definitely in our Discord, guys, looking to trade this further decline. Daily time frame, you are bearish on the MFI. You are as well on the weekly. You cross the median line. Again, volume weighted RSI, free gift when you join our room, as well as the volume rate of change. This is a momentum indicator for buying and selling. You can see momentum is starting to drop off because Bitcoin's just forming its range here, okay, on the daily time frame. And, again, I don't think this bottom we're going to is the bottom. Well, I know it's not the bottom. Now, could we go really deep? We could, but I'm still anticipating that 10.5, 13.2, okay? That's my range in there. And I'm anticipating that because, again, the real bottom will be post-recession next year. When we get into that recession, the markets pull down hard. That's when you're going to see Bitcoin go to its real bottom. That 3K 39.56 was the actual number that I had. So let's look and see if we have any information on here. We're starting to form a Wyckoff trading range. As you can see, we only have a couple candles. So we have our base that's formed, we have the reaction that's formed, and it gave us a range for the candles to go up and down, up and down. On the daily, not enough information, so let's go to the 8-hour time frame. 8-hour time frame, you're 200, 233, well above you. All the EMAs, the moving averages have to catch up to you. I only use long-term moving averages in the 50. That's really it. But this is where we're at now, forming a new Wyckoff range down here as well. And we can go ahead and just box this in. I like to use the bodies because Bitcoin is so volatile that you can get these gigantic wicks and then not have the range be of any value because you have such a big dump wick. So we're doing something like this. So we formed our base, our selling climax. We have our automatic reaction, got some up thrust. Now we're getting a sign of weakness. And what you want to see, you're going to have volatility in the range, right? You can go down to the 4-hour and look at this too. This is that classic M pattern, okay? So you might get some down thrust, come back up, test this range. And this is when you get up thrust candles optionality there to potentially short if you think this is going back down. From up thrust, if you get signs of weakness, you have to watch you don't form the classic double top. That's when you break, come back up, retest, Livermore pivot, move down, okay? Now, it doesn't have to do that cleanly. This could be multiple waves like we've had on the daily and weekly time frame for a very long time before we had movement. And conversely, if this does come down, get some up thrust or down thrust, and you do come back up, what you want to do is pivot out, back test your trading range, right? Livermore pivot to the upside. So those are your two options for how you break out of these ranges. And if you do break out, always look at your long-term moving averages, especially on the daily time frame, okay? Let's go ahead and take a look at Solana. Solana, we covered this yesterday. The reason we're talking about Solana, guys, I remember shorting Solana last year. One of the guys in the room back when it was like 250, and it was like a nice $20 move. We were both really happy. We got a really nice trade out of it. And you just think back, man, it would have been so nice to leave some of these shorts open. But, crypto's so volatile, guys. It's so volatile that, it would have been hard to leave a short open. This was a great short here, right? Looking at my cursor. But you got this great drop, and then you got this parabolic rise back up that definitely would have stopped you out. So, you just can't look at it like that. Unless you got in at the very tip top and left it open the whole time, it's really hard to think like that. So always just look at your current setups. So I took this wave projection just like last video from the very top. We're at 16.11 right now on price. I just want to show you this again because we held this 618 for a long duration of time of 29.46, okay? Held it for a very long time. And let's just get a better wave projection here to see what's going on. And we can look at this on a smaller time frame as well. See if we can get some more accurate projections, okay? So this is a daily time frame. I want to look at my MFI. You are bearish. Your volume momentum, obviously you have high volume momentum because you had a lot of selling, okay? A lot of selling happening here. But let's go ahead and let's do this. Let's try, well, we just did a measurement from up higher. Let's see where we can really expand this to see if we can get some good, I want to see some hits here on the wicks. Well, let's just try a fib retracement first and see what we get with this, okay? We'll go off the wick, the valley to the peak. Well, that's pretty good. Look at that, because that got you to the 1618. Do you see that? So you wicked the 1618 at 1190. How close did that get? That got to 12.09. So very close, within whatever, 19 cents. You got really close on this, okay? So that's a good layout, and you're finding resistance. Price is below 16.50 right now. So on the daily time frame, if you're setting this up in a volatility range, which is what a Wyckoff range is, guys, you're setting this up in a volatility range. Teach this stuff in the room as well, but let me go ahead and show you this. So we have our selling climax candle, which is basically the 1618, and now we have our automatic reaction, which again, if you put that up here, it's 1916. On the body, it's 1760. Okay, so I want to put this on the body too. This gives us a little bit tighter range, and if you expand this so you guys can see it a little bit better, you have price, selling climax, push back up, rubber band effect, right? Oversold, boom, snap back, and push back up. These become up thrusts, and now you're getting a sign of weakness. So you follow these steps, looking for down thrust and then looking to come back up and retest the range, potentially break out or break down. And let's throw this on. Let's look at this on the 8 hour, see if we see anything different. Solana. So you just can see more of your down thrust, more of your up thrusts that are causing a sign of weakness, and prices rolling back down to the downside. Okay, so these are all wave patterns, guys. Remember, we went over this yesterday or 2 days ago. Watch the last video. We get into Dow theory, talk about the difference, the terminology in Dow theory. A lot of you found that really useful, and you can see this just moving down, being rejected here at 16.50. Crypto's just kind of waving right now, and let's go ahead and check out XRP. XRP, look at this, hit the 1618 target of spot 31.82. So we did this based on a fib wave projection from the peak, the valley to the peak, and this is on the daily time frame. The daily time frame is my golden reference for looking at things like volume divergence, looking at things like momentum, because the daily time frame is a large time frame. Okay, it takes a long time to get your candles. A lot of people like to use the hourly and sub-hourly. Just remember, you always want to scroll up to look at this. This is where your moving averages, your long-term ones, are the strongest. Here Here's the 150 rejecting XRP. Here's your 233 up there. So XRP doing the same thing and making a volatility range, okay? So we hit the 1618 at 31 at spot 31.82. Price then reflected back up to spot 40 cents, and now you're just trading back and forth. Let's go ahead and get this on the 8-hour and see what we're looking at here. Get some more candles. And let's go ahead and do this. And you can see we're still in our Wyckoff trading range here. Now, notice this is the bottom of the range that we established on the daily, right? You're above the range, making all these shapes, fell back into the range, okay? So you can do a couple of things. We could actually get rid of this and make a new mini-coff is what I call it, okay? That's not a real word. I made that word up because I trade in Wyckoff concepts, geometric trading, Gann concepts, and then utilizing Dow theory, volume divergence, all that fun stuff, okay? That's basically my trading style. But let's go ahead and do this, and let's grab a horizontal ray, looking at a selling climax, deep retracement here, and let's go ahead and get an automatic reaction, a change of behavior in the candles here, okay? So this is our mini cough structure. So again, you're looking at the same thing, selling climax candle, rubber band effect, shoot back up. This is your automatic reaction, your up thrust, and now you want to see where price goes. And obviously you can carry this down to the 4-hour hourly, start zooming in, start looking for scalps. We do flash scalps as well in the room. So you can see this, and we'll see where this goes, what levels it can hold. Let's get another. I always use the daily fibs and carry them over, but let's just see what we can see here. Let me zoom out a little bit to see the structure. Maybe we'll take a fib wave. I just want to see what this looks like. Let's take a fib wave from that peak to that valley to that peak. Yeah, see, this is going to be too far down. So your 382 would basically be your base. So we can do. We can start from a higher up starting point, or we can just go ahead and get a fib retracement of this move. What do we want to do here? Where's your high? Where's your low? I like the fib wave projection the best, so I think I'll just do that again. I like this because this hit the 1618 perfectly. Yeah, like that. So we can use these fibs as they lay. You could take a fib retracement from this high here after this big selling climax here. Take it from that high to that low and get a really tight range if you want to zoom in. But you can see this is bouncing right off the 1272 at 36.75. Okay, so your levels to hold, you know, your 36.75. You're going to have volatility in here, so I don't focus too much on this. I focus, once again, guys, on the breakout to the upside and that Livermore pivot to the upside, or the Livermore pivot to the downside. This is what I'm focusing on, but lots of people like to trade in here. So the 1414 at 34 cents, and you want to hold that 1618 at spot 31.82, because if you don't, most likely your bias is to go further down. Okay, so watch this volatility, look for a breakout, set your charts up, and then you can trade accordingly. Obviously understand what's happening in the macro market. If more news comes out about other exchanges, about lawsuits or whatever, you could see a lot of volatility in crypto. Let's go ahead and jump to the equities, guys, because equities had massive pumps. And you know, I set up, this is the Russell. I like to trade the Russell. Why do I trade the Russell? Well, you know, the Russell, the PE of the index is over 70. It was 71 or 72 a couple weeks ago. You remember the S&P, the Dow, they're all about 20 right now, I think, 19 or 20. So this is massively overvalued. A lot of zombie companies. It's estimated up to 25 to 33% of the companies in the Russell don't make any money, okay? In the Russell 2000, they don't make money. They live off of debt. So this is a great index to short. And prior to this FTX event, was tracking super clean. I was the only person on YouTube tracking this to the Bitcoin. Okay, they track so close together. Small cap tech is a lot of weighting in here as well. Now we have our Fibonacci fan going from the pandemic low. I posted a trade in the room, 1877 to 1891, and we activated that, pumping up. Where did we get to here? We got to 1902. Okay, so we got a nice little wick up above it. Here's your 200. Russell can get above the 200, make shapes and fall back down, but it comes back down. Again, the Santa Claus rally, that's what we need to talk about, because the Santa Claus rally, I told you it's not in my books. I'm not impressed with these rallies. These rallies happen, these massive 2.5-year rallies happen off of that CPI print. Doesn't change the leading economic indicators, doesn't change the fact that earnings I expect to be really bad, and we only have 6 weeks left in a year. So we're trading at key resistance points. taking probability trades, okay? High probability trades. If you are going to short and you feel so inclined, like myself, the 618 on a Fibonacci fan going back to the pandemic low, retesting the 200, which as you guys know, we've talked about this because we've been shorting this over and over, talking about it on YouTube, posting trades in my room, gives you massive trade setups, okay? So you want to look at high probability trades no matter what asset you're trading. So this is worth the risk to me. It's worth the stop loss. Taking this at 1891, we'll see if we get a retracement, at least back down to the 50. And at some point, we're going to come down and retest these lows. May take 6 weeks. I do not know. We'll see what happens if we get more bad news in the marketplace or catalyst for good news, right? This is all part of trading. So 1879 is where you're at now. We hit a high of 19... What did I say? We hit a high of 1902. Hit a high of 1902. We've already retraced, $22. So we'll see if we start making our topping action here, maybe get a double top or just roll over like this and fall down. And that's at the 618 as well, 1877. So you're just above your 618. You're caught. I guess I could zoom in instead of pointing at this. You can see this. You're just above your 618 over here for the fib, and then you have the 618 Fibonacci fan. So this quadrant I identified as an excellent quadrant to attempt. I am not Bob Ross today. I'm not drawing very well, but this was an excellent quadrant to attempt a short, okay? And so we're looking for this to lose the 200, come back down, test the 50, and then eventually retest these lows. Okay, that's what I'm looking for. We'll see what happens with this rally. I wasn't impressed. We were talking about it in the Discord. A lot of the members noticed this too. Volume divergence is key, guys. You can have volume divergence for a very long time. Again, look at this massive move up. This was a massive move up. Just to give you an example, where is it? Price tool. Coming from this base on that last rally, 24% move, okay? But when we open up our indicators, this 24% move, look at the volume momentum during this move. Negative, right? So you had fewer participants, and I can turn on my volume indicator as well. You had fewer participants paying higher prices. Again, the FOMO effect. You see, here's this whole move up. See the little gray candles? Below average volume. Only a few average volume bars and a 24% move up, which is why I was able to nail this trade. Once you hit the 200, did it go above it? Yes, it did. Again, you're not looking to the dollar, guys. I trade vis-a-vis quadrants and fib resistances, okay? So this is a fantastic trade, a massive move down using volume divergence, money flow. You can see it topping out repeatedly, making a triple, quadruple top, basically, then forming a double top and then collapsing. And what you have now is you have on the money flow here on the daily, this big pump candle did not reflect in the money flow. It was flat, okay? And look at your volume momentum. It actually went negative. Again, fewer participants, and looking at the actual volume candle itself, that big pump candle, which you can't see, just take my word for it because it's not zoomed in, is a little gray candle, meaning below average volume on a 21 period setting. Below average volume on the largest pump in 2.5 years. This is going to come back down. It may need to make a top first and then fall down, but it will come back down. And this is across all the indices, okay? Looking at the Russell here on the weekly time frame. Well, I did those backwards. The weekly time frame, there's your 50. Again, the 200 daily and the 50 weekly are your two key bear market indicators. You need to break above both of them, have an upward trend to start reversing the long-term downtrend. You're getting hung up once again on your 618 Fibonacci fan, 50 just above you. Again, key quadrant. Looking at the money flow, you are bearish on the weekly, coming back up to that median line to retest it. And of course, your volume momentum is garbage. So your volume momentum shows you that you're going to have a bias to be building a top, okay? And let's go ahead and then jump to the Dow. Now the Dow pumped the hardest, okay? The Dow really pumped. And as you guys know, I was talking about a short here. I'm in a short myself, which I'm either negative or just now breaking even at. So we have the Dow and our 618 Fibonacci fan, excellent short, 50 weekly moving average. This is a weekly time frame. And so I thought, Third time's a charm would be an excellent short. Obviously, it pumped up with some more momentum than I anticipated. Again, because it's the strongest pump in 2.5 years. Was not expecting that, but I got up to 33,954. I got in at like 33.7, 33.8. So I was negative. It looks like I'm slightly positive now. We'll see what this does, but I do anticipate, just like everything else, the Dow's not going to keep pumping and everything else makes tops and dumps. Okay. The question is, will the Dow go a little bit higher before it makes the top, or will it start rolling over here? Can't really see that information on the weekly time frame. I trade on the daily, an 8-hour and 4-hour. But again, I showed you this last video. Why short the Dow? Because at some point, this back of the golden triangle that we formed here with Fibonacci fans, which again, you're not going to see this on any channels, okay? But this back of the golden triangle, be quiet, Tiger. This back of the golden triangle drops you back down to your pandemic lows, 18,421. Again, we showed this the other day, but it lines up just about perfectly with that wick, okay? So this could be that wave, but it's going to have inflection points. Price doesn't move straight down like this unless maybe there's a big war with a certain type of weapon. I'm not allowed to say that word. Again, this is why we're going to be doing Rumble specials. A big war with a certain type of weapon that is used, and that weapon causes mass destruction, and then you could see a parabolic drop like that. But until then, you're going to wave, and your next key point to test again is that 200 that you fell below and came back up, and that 200 is right at about 30K. So when this does make a top and start rolling back down, I'm looking for a retest of that 200 and possibly going below, and if it breaks through it, obviously going to take wave projections there as well. Looking at the Dow on the daily, get our base case. The Dow, again, below average volume candle. The money flow does not reflect the largest pump in 2 years. The money flow is actually bearish, so you already have money flow divergence, okay? You have divergence. When you get divergence, you get retracements, you build tops, just like that big Bitcoin trade. And of course, the VROC, the volume momentum rate of change here, actually went negative. And as you can see, you had this big wave volume for selling, and you flipped negative, below average volume, divergence on your MFI, and you pumped up the strongest pump in 2.5 years. I thought, good area to potentially short. So that's what I did and posted that trade as well in the room. Guys, you can trade that stuff on SimpleFX and get up to a $5,000 instant deposit bonus that goes into your margin to instantly trade with. No rollovers, none of the games that exchanges play. It is there based on your deposit. All that info with our link is in the video description. S&P on the weekly, once again, the golden triangle we talked about. Looking at the weekly, you are bearish. Volume momentum is negligible, but you are bearish on the money flow. You're testing. Look at that. I mean, this is why I love fibs, guys. This is exciting to me. I know it's really geeky. This is exciting to me because look how accurate that hit was on the fib. The Fibonacci fan, the 618, the golden triangle, literally to the dollar. To the dollar, it hit it and got rejected, okay? That's at 39.90 spot 3. Okay, 39.90 spot 3. Can it still punch above it? Yes, it could. And I'll show you on the daily time frame, but that's because you were below your 200 and 233. The 50 is way up here. So in theory, if you got some type of Santa Claus rally, that 50 would take you up to 41.69. Okay, and that's what the people on TV are talking about when they talk about a Santa Claus rally. A lot of you guys are asking me for details. It's a seasonality thing that these market managers, portfolio managers talk about after midterms, going back like 40 years, whatever it is, 50 years. There is between a 14 and an 18% move over the next few quarters to the upside. Now, the difference here, of course, is if my premise is correct, which I believe it is, obviously, which is why I keep shorting these markets, you're in a bubble. We're going into a recession. So I don't see a big Santa Claus rally. I think they're all going to top out. And what leads me to believe that is confluence. Low volume rallies, fewer participants paying higher prices, key resistance above us that still has to be tackled, okay? And again, this golden triangle on the weekly time frame, you have your long-term 200, which you fell below and came back up, but you're getting tight in here. You're getting tight. This next wave down could be a big wave down where you come back, maybe make a double bottom shape. It all depends on the effects in the marketplace. Again, these external drivers, these external catalysts in the market, guys, such as a below expected CPI caused a rally. Had that number come in hot, what would have happened? You would have had a reversal, a dump. Okay, so there's things that we can't control. There's a conflict going on. There's political things that are happening. So, there's things you can't control, but what you can see is the charts and then determine the bias of the next movement. Okay, and for me, you're going to be topping out. Looking at the S&P on the daily made a nice double top on the MFI, kind of going flat. Again, going flat, but tilting downwards. Okay, if you zoom this out, you can see the divergence. This is coming down where you got this massive 2.5-year pump up. This is why you're getting a doji candle on the daily right now, symbolic of, with divergence, by the way, and volume divergence, symbolic of potentially making a top. Now, the easiest way to trade this, which, trading's never easy, but you would want to see this pump up to your 200, 233, 764, Fibonacci fan line. That would be ideal, right? In this area, that is 4030 up to about 4100 in that range. Okay, so that 70-point range in here, this would be a kill zone to get a trade into, but I don't know if you're going to get up there again because of the divergence, because you had this massive pump, and because reality is setting in. The smart money already knows this, the large operators, that we have elevated high inflation, regardless of it coming down spot 5, and we have elevated high inflation. Okay, so knowing that the Fed's going to stay higher, they're going to continue to raise rates. So a lot of people may be using this as a rally to sell because this is a big market rally. We're going to go ahead and measure this because this is the broader market, guys. This is what the S&P is, 500 companies, a 14.37% rally. Bear market rally. People are asking me, how do you know it's a bear market rally and not a bull market? Well, a primary trend, again, below the 200, below the 233, below the weekly 50, obviously lower lows and lower highs in trend, and now you have this big rally here on the daily. But guys, outside of that, 20 of the 26 biggest up days in the market happen in bear markets. Bear market rallies are extremely sharp. Okay, Dow wrote about this as well. It's the same concept of, if you ever saw that movie, The Revenant, with Leonardo DiCaprio, it's the bear coming out to attack you, maul you, and then you think the bear is gone, right? You think the bear is gone and price is rising back up, and then what happens? The bear attacks you again, okay? Just like in the movie. But it's the same concept. Bear market rallies are really sharp until the bear rushes out, shows his teeth, shows his claws, and you fall back down. And where does that rush out typically happen? At long-term key resistance. But again, because of this massive rally, I don't know if we have enough juice to get up there. Maybe we do. Maybe you will see this defeat this fib fan and come up here in that kill zone. But until then, this isn't something I'm trading because I don't like this resistance here. It's between key fib levels. It's not at the long-term resistance, whereas you already have the Dow well above its long-term resistance. But, again, the indices aren't going to pull down without the Dow as well. The Dow is very overbought. And then you have the Russell already getting rejected at long-term resistance. So there's better trade setups, in my opinion. But to cover the S&P, looking at this is 618 at 39.14. You got above it. Next key level was a 786 at 40.30. Okay, so you're just floating in between. So that's where we are right now. And again, volume divergence, money flow divergence. We'll see if you can get enough participants to pay higher prices to move the price up. But until then, I would look at other assets. Nasdaq, guys, Nasdaq on the weekly. Pull this over. Nasdaq on the weekly, and you're bearish on the money flow, bearish on the volume momentum. Let's go ahead and zoom that out. And then looking at the Nasdaq, it did pump above its 200, 233 once again on this massive pump, which you can see better here on the daily time frame. Went ahead and threw this in Wyckoff as well. And let's see this. So you have a nice double bottom that formed here, and you can see this captured in Wyckoff, right? So here's your double bottom, first part, second part. Here's your move up. Now where you are now is the potential to make your Livermore pivot. You pumped above the 50. You want to hold this range. You can come back down and back test the 50, but you don't want to fall below it, or you might have to struggle to get back above it. You want to back test that and break out to the upside. What would your target be to break out to? Your 200, 233 and your 618 Fibonacci fan. This quadrant, 200, 233 is roughly 12,650. Okay, 12,650. And remember, these will be descending. That's what you want to see a breakout to, but you're at 11,674. You need 1,000 points. So let's do a little detective work here and see if that's even possible based on what we're seeing on the charts. Well, let's go ahead and throw some volume on here as well. Where are you? There you are. All right. So we have a below average volume bar on a massive 2-year high pump. This 1-1 orange fan line here is a GAN fan, guys. I have a GAN fan video. I think it's the second or third most viewed GAN fan video on YouTube now. I put that out there on YouTube. It's free. You can go on Market Makers, search GAN fan, and then you can find my GAN fan video, how to lay these out. 45 angle is key for long-term trend. Above it is bullish, below it is bearish. You can see how you tested it, got caught beneath it, bounced back up off of it, okay? But we'll go ahead and measure this as well. Let's get we'll do it from the wicks. Fib wave projection. You are getting rejected on the upside here at the 886 at 11,716. You have below average volume. The next fib up is 11,859 at the 1 fib. If you flip the 1 fib, that is a bias for a move continuation to the upside, okay? So you double bottom here and move out. So that it would be a bias to flip the 1 fib for a move continuation to the 1618 at 12,638. Beauty of Fibonacci. Look at this quadrant right here. That's a hell of a target if the Nasdaq can get up here, okay? 1618, 12,638, 618 Fibonacci fan from the pandemic, and of course the 200 and 233, which every time you've contacted it and or got above it, you make a shape and collapse. Because why? Because you're in a bear market, okay? So watch that information, and of course keep eye on the volume divergence, money flow divergence, all bearish indicators, which is why I don't know if you'll be able to move up another 1,000 points, but we shall see. Wow, this video is the longest video I've ever made, guys, 40 minutes. So quickly, I'll do gold because I was asked about it. Gold is pumping up at 1764 still. I will anticipate gold will move down with the market. Should be moving inverse to the market. Inflation came down. You think gold would come down, but gold is moving with the other asset classes, guys. It's moving with the other asset classes. When the markets come down, gold will come down just like in 2008 where it went down 34%. I have that 1425 target for gold. Looking at oil, I've said this before, I'm not interested in oil until it breaks the 300 and the 233. It is still below it. You need to get above basically 92.50, 92.58 and hold it, break back into this trading range and come up, okay? That's what I want to see, because until then, it's volatile, it's manipulated. We're still dumping oil from the strategic oil reserve on the marketplace. You have some countries cutting, other countries increasing. You got to stay on top of that. You can see it in the price, but from a technical standpoint, I want to be above 92.50, have some cold winters coming in to see this really move up. Remember, in a recession, in a slowing growth economy, and China's still locked down, you have oil prices come in because demand is lower, okay? Still elevated, clearly, but oil prices will come in. So what's going to weigh out here? What's the equilibrium? Hardcore recession, will that hit before oil really shoots back up again, back maybe into the hundreds, 110, 120 like it did before? Or will, oil really take off because maybe China opens faster than expected? We have shortages of supply that are unforeseen in Europe with the winter time coming. We'll see what happens. All right, guys, hope you enjoy this video. Follow us on Twitter. Follow us. All that link is in the video description. Follow us on Rumble. Type in Market Makers and Rumble. Join us there. And of course, like and subscribe. Talk to you guys soon.